Hey, what's going on guys? I hope you're having a great day today. My name is Will, and in this video, we're gonna go over my top stocks that I see value in for the upcoming month. Now, this is gonna be May, so last month we did April, and just to give you guys kind of how that went, after I did that top 3 stocks, all the stocks actually exceeded 5% returns on the month, so really excited about that. Hopefully you guys maybe got into them. In no way are these suggestions for what you should invest in, right? I'm just sharing these so you guys can kind of see how I break down a stock, and that can give you a better understanding of when I am breaking down a stock, what I look for, some of the tools I use, and just giving you, a beginner's understanding for how to break down a stock. Now, I know that some people may invest in some of these stocks that I'm investing in, and that's totally fine. Just make sure that you do your own due diligence and that you identify the potential, and it's not only based on, what I'm saying, okay? So hopefully you guys enjoy, and let's get right into it. Hey, what's going on guys? So we're here on Chegg, and you can see today it pushed up 4%. So that's pretty cool. Thought I'd share that with you guys. You can see on the past week, it's down 7.3%. On the past month, it's down 1.58%. Past 3 months, you can see it's an uptrend of 6.3%. The past year we got 64%, and then you can see a consistent uptrending pattern on the 3 month, the 1 month, or the 1 year, and the 5 year. Okay, so what we want to look at here, as far as the technical analysis goes, we're going to get into the news, the analyst ratings, the earnings, but I wanted to get into overall the technical analysis first. Okay, so what we're going to look at here, as you can see, it's a consistent uptrending pattern, right? Except for the sell-off we saw back in March, it was definitely recovering from this. Okay, so we saw March 2019, it was at $41. It sold off aggressively to here. Then we saw it consolidate a little bit, and then we saw it sell off. Okay, now this recovery is nice. We've seen the past day, it went up about almost 5.4% at one point. Okay, so that could be a really good indication that it's going to continue up. I know it may look a little overextended at this point, but when you take into consideration, where it's at as far as its trend, it may continue up. And I know that, I don't usually invest in something that may not show as much margin for profit as it does risk, but Chegg, based on the news as well, which we'll get into, may have more upside, okay? So just if it were to get to where it was earlier this year, we could see, if it were to get being conservative to where it was back on March 8th, that would be about 11% margin for profit, okay? So that's something I find really attractive, and that's about 10% if it gets up here. Okay, and we'll just have to see how that goes. Now, I know Chegg as a company has been doing really well. Right now, it seems to be at a sensitive price area. Why is this sensitive? Well, we have this previous support here where it was consolidating, right, from March 22nd until April 17th. Now, this area right here where it was consolidating, there's a pretty strong, support right here. So previous supports, as we know, act as resistance, okay? So the fact that, it's approaching this previous support here, we may want to just be careful. It's a not a buy right now, in my opinion. I want to wait for a break above about $38, and then I would find this stock to be, more of a good deal, and it'd still offer like a nice 9 to 10%, okay, margin for profit. Now, that's the technicals, right? If we see it break above about $38, could be a good deal, and, a potentially good buy for a swing trade this month. Now, when we're looking at the news, you can see Chegg CEO, we need to make learning more available and adaptive. So, simply what this is, this is a company that focuses on education, right? They provide they're similar to Netflix in their journey, okay? So Netflix, just to give this some context, Netflix started out, as you guys may or may not remember, as a delivery service, right? They used to send out like hard copy movies in discs that said Netflix on them, right? And you would watch your movie. Now, as we become more digital and things started to advance, then they have this, library online where you can watch all the movies, right? And you don't need to order anything because it's all live streaming. Now, Chegg used to send out books for, college students and high school students, and they would do it at a discounted price to what you would pay if you were, buying them from the college. Now, what they're doing this year, and as of I think about 2 years ago, is they have these electric, digital books that they give people access to when they subscribe to Chegg. So they get all these study tools, they get these books, they get these different platforms, and then they're also buying companies like, I don't know if you guys know Slater or, these different tools that you use to help you do your homework. So they're really into the education space and providing people digital products that help them to study, right? As well as books. So there's a lot of growth potential for that. And that's one reason they've experienced this growth, in the past 5 years. And then now, with this pullback, I see it as a potentially good deal, especially with validating the support around $34.50. If I can even reach it. $34.74. And we saw that over here too. Okay. So, Chegg definitely looking for a buy opportunity here. And you can see 58% buy, 42% hold. We don't want to, only pay attention to the analyst ratings or only use solely one indicator. But when it comes down to like the analyst ratings, this can be a good indication of a buy or sell. But I wouldn't pay too much attention to that. All right. When it comes to the earnings, this is what I find so attractive. All right. So they always beat earnings. And this quarter one, they just came out with the actual EPS beating the EPS by 3 cents per share. All right, so that's something I also find attractive, and that could have been why it pushed up today. But overall, experiencing consistent growth, an overall consistent uptrend. And if you want to grow your account in uptrending fashion or pattern, it would make sense to invest in an uptrend. And then when you see this pullback here, it's similar to what we had over here back in September when it pulled back, and it may have more to give. That's why I'm waiting for a break above around $38. But yeah, overall, Chegg looks like a good buy in my opinion. Of course, you want to do your own due diligence, look at the other indicators as far as maybe the industry or what's going on with other companies that have similar patterns. Okay. But overall, it looks like a good buy. Okay, so that's Chegg. I would buy around $38 and sell this month. Okay, probably sell around $40 to give you guys a ballpark. All right, so the other stock I wanted to go over really quick for you guys would be Cro X. And this stock is something. This is one of those stocks that is kind of like an underdog in the sense that it's Crocs, right? But they went up about 3.5% on the day today. We see 1 week about 5.5%, and then on the 1 month 9.17%, 3 month 1%, then consistent uptrending pattern on the 1 month. Okay, so maybe a little overextended right now, but overall I like this consistent uptrending pattern. Now where it's at right now, and to where it could go, being conservative, about 8% margin for profit. And that's something I find attractive. Okay, so CROX, where it's at right now, it's at a previous resistance. Okay, being at 29.18, and then seeing this previous resistance that we see here, and then also right here at 29.10, it just broke above that for the most part. So it's a stock that I see value in right now, right? It's something that I'm kind of looking to maybe buy here, tomorrow. I'd like to see a slight pullback after this push up, but that would make sense why it pushed up, based on its recent news where it says Crocs have a new look and they're drawing strong reactions. There's a few other articles that go into why Crocs may be a good buy, and you guys can read through those. But when it comes down to the technical analysis, I find this uptrending pattern that's so consistent very attractive. All right, and in order to grow your account in uptrending pattern, it makes sense to invest in an uptrend. Of course, we want to make sure that the risk is not so great. So it seems a little overextended right now. So I'm going to wait for a pullback. All right. But overall, news looks good. 43% buy, 57% hold. The reason it says hold, in my guess, would be this consolidation the past 3 months, how it's kind of only gained about 1%, because there's 3 stages to a reversal, right? There's, the trend of an uptrend. Then there's going to be, consolidation, which is the second stage. And then the third stage, which is going to be the reversal in the opposite direction of the initial trend. So, that doesn't necessarily mean it's going to reverse. It just means it's consolidating right now. It's at a sensitive price point, kind of, being at this previous resistance. And I'm going to look, and see if for a day trade or, a swing trade for about a week, if there's, if it presents itself, then I'll, seize that opportunity. And we'll just have to see. But as of right now, it seems like it's kind of at a sensitive price point. Like I said, I'd like to wait for a pullback and then maybe, confirmation of it, continuing up. Okay. And then based on the earnings, it almost always beats the earnings. Here we can see quarter one, just about even, a little over the expected. Quarter two, that lighter green is the actual EPS, and then that darker green is the expected EPS. So when we see a stock, beat the expected EPS with the actual EPS, the earnings per share, then that would mean that it may be a good buy, especially if the stock doesn't have a great day on that during that day that it beat the earnings per share. So, overall, Cro X looking like a good buy. I'd like to see a pullback so I can get a better deal. But one thing I really find attractive for a swing trade or a day trade is this consistent uptrending pattern. So, that's going to be it for Cro X. That's my second stock. And then the other stock I wanted to go over here, I wanted to take a look at Tesla. Now, I know Tesla has been having some trouble lately, but I also really see, today was about 4.48%, which is huge. And then we have, this consistent downtrend, right? So, right now you can see it's a very clear support line at these lower lows. It's making lower lows, and it's making lower highs, okay? Pretty clear, support line that's descending, and, resistance line. Now, it seems to be a little oversold in my opinion. And yeah, it's right at this previous resistance that it bounced off of today. And we'll just have to see if it continues up. I'd like to see it break above like this previous support here around 267. And I would see it as a really good buy opportunity simply because I think it's a good company. There's some things going on lately that seems like Tesla's been having trouble. But overall, I like, it says 39% buy, 26% hold, 35% sell. You don't want to pay too much attention to the analyst ratings, as far as it goes, but it seems like that's pretty up in the air when it comes down to the analyst ratings. And you can see the buy ratings. Its unique supercharger network makes Tesla the only automaker directly trying to alleviate the range anxiety of buying an electric vehicle. All right. And, the buy rating is comparative, that, they are a supercharger company that's focusing on electric vehicles. Whereas if other companies jumped in, it may negatively impact Tesla very quickly. All right. And then also mass electric vehicle adoption by consumers could be many more years away than Tesla expects. So maybe people aren't so, there may be consumers reluctant to start using electric vehicles because they're relatively new. But I don't see that as too much of a drawback. And we'll just have to see, based on the technicals, it seems to be a little oversold. And we'll just have to see if we get a break above that around 265. I'd see it as a good buy. Okay. And when it comes down to the research report, the economic moat, none, right? They don't have too much protection from another company coming in with the electric cars. The fair value, which is below its current price, that's as of yesterday. Okay. So, that would make sense, 240. But when it comes down to the fundamentals, that makes sense. But we'll just have to see because I think that there's like it says here in the report, uncertainty very high. All right, so if it said narrow, then that would mean that they're very certain that 240 is the fair value. But with a very high uncertainty, they're not sure if that's very accurate. All right. And then based on the earnings, they didn't beat the earnings, right? Not looking so good there. But overall, it just seems to be a little overextended, or oversold. My apologies. Sorry about that. Yeah, oversold. Okay. So yeah, I'm going to keep an eye on Tesla. And, for the month, I know it's a downtrend right now, but I'm keeping my eye on it as a potential trade. If we see it break above around 265, then I may look to buy. Okay. I may look to buy with a break above 265. And that's really just it when it comes down to Tesla. So guys, thanks for watching. Those are my top 3 stocks here for May. And if you guys have any suggestions for stocks you're keeping an eye on, feel free to leave a comment down below in the comment section. And if you got any value from this for when it comes down to breaking down a stock, or you learned anything, just smash that like button. I'd really appreciate it. And hopefully you guys enjoyed. Thank you for watching, and I'll see you in the next video.